Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq-100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on Nasdaq. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining us this Thursday afternoon, we have Joyce, Managing Director on Nasdaq's Market Intelligence Desk, for an update on technical levels to watch in the Nasdaq-100. And Brian, it's refreshing to see that the Nasdaq-100 is relatively outperforming the other indexes this afternoon with a rebound in tech stocks.
Yeah, I mean, it is for one session, so that is good to see. A week ago on Friday, we had the big rebound off the lows, which was when we were talking last Thursday. To me, that looked like a pretty strong reversal. I was expecting to see better upside this week, and we didn't have that strong follow through. Really, it was yesterday that we had the big decline again. So
yeah.
Very volatile, choppy markets, as we've been talking about all year long.
It makes you wonder on Friday, because of the choppy markets and the very overnight nature and with everything that's going on globally. You wonder if a lot of people just covered going into the weekend. I'm not quite sure I'd want to have a very directional position either way going into a weekend with the market that the way that it is, because they're really, with the exception of the downside, the chop really is the trend. It's kind of anyone's guess at this point.
Yeah, and last week we were down 6 weeks in a row, and Thursday was the big decline. I think it was last Thursday, but late in the day on Thursday and then into Friday we had the big rebound. I think you're exactly right.
Mm-hmm.
We were discussing that on our desk. Which way do we think the markets will finish on Friday into the weekend? And I think the consensus would not be surprised to see some recovery take place. Just given the dramatic move to the downside. I was expecting, like I said, better follow through this week. So, we're not there yet. It still remains to be seen. We haven't broken last week's lows. So if we close around here, we will close below where we were last week as of Friday's close, but we did not break the intra-week lows from last week.
Yeah, I think the state of the earnings this week is certainly what spooked a number of investors. But let's take a look at your Nasdaq-100 chart, because we're kind of at a pretty significant retracement level if you want to compare it to the 2020 lows.
That is correct. I would agree with that wholeheartedly. So the initial decline that bottomed in late February, and then we retested those lows in March, was the 38.2% Fibonacci retracement. And then we had the April rebound. And then when we rolled over and bottomed last week, we bottomed then at the 50% retracement. The retracement range we're discussing is the lows from 2020 up until the highs in late 21. So those are very common Fibonacci levels. If we were to go to the next leg down, that would take us to about 10,600. That does line up with the 200-week moving average, which is slightly above that now at 10,700. So those fib levels have come into play so far on this pullback.
All right, and if we take a look at the Russell, we haven't spoken about this index in quite some time.
The Russell 2000?
Or the value, I'm sorry, your value chart.
The Russell 1000 growth. Yeah. So the Russell 1000 growth, the large cap growth companies in the United States, this is also in a move now down 6-7 straight weeks in a row. What's interesting this week is the value index, which has been holding up relatively well, but just this week it's now beginning to break below this support line that's kind of been in place since June of last year, so almost a 12-month support line. We did get it down below it last week, and then we rallied back into the close on Friday, but we're now seeing the downside break here. And so earlier this week you were talking about some significant earnings, that was from your Walmarts and your Targets. They most likely would be in this index here. And so we're seeing that rotation where the initial declines were in these small cap stocks, growth, predominantly growth, and then we then see it filter through to the large caps, and that's been the case really in April. We saw a lot of those large cap growth stocks. We're now seeing that rotation into some value names as well. And I believe margins were the big concern with those two companies.
Yeah, and Brian, let's also pull up your chart on rates here, because really, when we look at the underlying fundamentals of the market, supply chain, geopolitics, and interest rates.
Well, yeah, so we could see that we're looking at the break-even rates here, and this is only going out 3 years, but we could see what the market expectation for inflation is going out 3 years is it peaked around 4.35%. And it's down about 90 basis points from there. So, and that decline has really been taking place since mid to late March. So maybe the market is starting to believe that the actions of the Fed is now impacting future inflation expectations. When we look at the 10-year yield, this is the one that I like to look at, and most market participants as well. We could see that this level around between 3% and 3.25% has been the highs going back to 2013. We retested them again in 18, and then again this month. This is a monthly period candlestick. So just in the last 2 weeks, we haven't seen any upward movement in the long 10-year yield. So, and this candlestick here is looking a little bit toppy. Again, it is a monthly candlestick, so it's very long term. So, but I think it's somewhat reassuring to some to see that, despite the continued decline in equities, we're not seeing the continued decline in treasury bonds that we have been seeing over the last 4 months. So it would be interesting if this is a change in character and that bonds will return to their safe haven status. I think, again, the confidence in whether or not the Fed will be successful in dampening inflation will probably, go a long way into seeing how this chart here plays out.
All right, Brian, appreciate the insight as always. It'll be interesting to see what the narrative is when we meet next Thursday. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.